Alrighty, what's cracking? This is Terrell with Seven Kings Trading, and today we have a video exposing the weaknesses of indicators. Okay, a little while ago, I did a video exposing support and resistance, and uh, been meaning to follow up with this video. Just kind of got discouraged as far as the videos went, simply because Um, I was doing them all fancy with the green screen stuff like that, and um, just became like more work than I wanted to do. Like the effort to get the green screen up and set up in my office, and um, it just wasn't worth it. The whole purpose of me getting into trading was to, bring more peace and, kicking it, like less work, more time having fun, spending time with my family, making the money in order to do those things without really worry. um and then the green screen, just like getting everything set up, making sure it was like, focused in, and yeah, it wasn't fun for me. So gonna be doing more videos, but they're gonna be simple like this. You're gonna see the screen. I'm not trying to become a celebrity, and I don't think, people want to see me on that level anyway. So it's just better to keep everything focused on what matters, which is the price on the chart, because that's what we're here to master. So I will be doing more videos going forward, looking to do at least one to two every week, maybe more, depending on the week, but on average, at least one to two. And um, some of them will be reactionary to other videos that I see going on out there. Um, but for the most part, it's going to be just me, marking up my charts, giving you some levels and showing you what happened with those levels. I'll be doing the videos mostly on Wednesday and Thursday every week. So there's going to be transparency there. I'm not going to be cherry picking like the good days and only do videos on those to make it seem like, what we're doing at Seven Kings Trading is just amazing and you're never going to lose, because that's not the reality of it. So um you will see, and if you follow us, and hopefully you do, you'll see that what we're going to be doing is very profitable. Even when we take losses, the losses don't compare to the wins. And so when it's all said and done, we're making money. But I'm not gonna, sit here and act like we we don't take losses. You know what I mean? We do. So, one to two videos every week on Wednesdays and Thursdays, and yeah, hope you guys subscribe to the channel and follow, like, you know, comment. Let's have conversations about what's going on. If you have any questions, reach out. But yeah, they will be more consistent, but today we're just going to focus real quick on indicators. Okay. Already did support and resistance, kind of exposed how that's very random and it's gambling. And then in this video, we're going to be focused on indicators and how it's even more gambling. So, first issue that I have with indicators is what you focus on when you look at the chart when indicators are on it, because I think that's a big problem. If you look at this chart right now and you're being honest with yourself, where do your eyes go to? What do you focus on? Are you really looking at price, or are you looking at these lines? Looking at this down here, which is just more lines. Um, if you're anything like me, and you may not be, I know a lot of people are, but I know there's going to be people that's different. But if you're anything like me, when you look at this chart, your eyes go straight to these lines. Okay. And when you're first learning how to trade and people are showing you the indicators, everything is about the lines. And so it makes sense that that's what you're going to focus on. It's all about when this line crosses over that line, or when price crosses over both lines, or when this line gets to this line. It's all about these lines on the chart. Well, I can promise you, these lines on the chart is not what makes the chart move. These indicators are all based off of a mathematical equation, and that's based off of what price is doing. And so that leads me to my next issue with it is that it's lagging. Your indicators are all going to lag behind price. It's impossible for it not to, because again, it's a mathematical equation based off what price does. So in order for that indicator to be plotted on your screen, you first have to have price do what it's going to do. Once price does what it's going to do, the mathematical formula that the indicator is based off of is going to go through its equation and then plot the results on your screen. And so, in order for you to get any of this, any of this, you first have to have this. Okay. And so, and now that I've taken that off the screen, now what do you focus on? You focus on price. And I mean, if you're going to learn how to do this correctly, if you're going to do this for a living, you have to know what price is doing. It's a language. You cannot become a computer programmer without learning the language of coding. You're not going to be able to move to Japan and function like the people that live in Japan function without learning Japanese. You'll be able to get around, you'll be able to manage. And the same thing applies here with these indicators. Yeah, you'll be able to manage. I'm not saying there's no possible way that you can make money using indicators. But what I'm saying is it's going to be hard. It's going to be a grind. Just as if you move to Japan without knowing Japanese. You're going to be able to manage, but it's going to be hard and it's going to be a grind. Okay. And they speak English regularly over there, but it's still going to be a grind because you have to know the language for the environment that you're in. Okay. So the lagging leads to your decisions being reactionary. Okay. You're going to be reacting. What do I mean by that? Well, how does this basic strategy work? Okay. We have a few strategies on the screen right now. Okay. The first one is the simplest one of all, which is your price crossing over your moving averages. Okay. And these are two exponential moving averages. I think I have a 21 on here and a 50. The 50 being the most popular. Yeah, 21 and 50. Uh, the 200 I kind of just cut out, but we could throw that on there if you want, because between the 50 and the 200, those are probably the two most popular um, averages. So anyway, most of your strategies consist of when prices, when you're talking about your moving averages, when price is above these lines, you're looking to buy. When price is below the lines, you're looking to sell. Okay. And so, if let's get that 200 out of there just because, yeah, you're really late to the party if you're working with that one. So, let's give you indicator people, you moving average folks, as much of an advantage as possible. So, um, if you're looking to get into this trend right here, okay, if it's a simple moving average strategy where price gets below the moving averages, that's when you're going to enter. Then you're going to get in somewhere around here. So let's go ahead and get in there. You're going to put your stop loss somewhere above that high, right? and then you're going to look to get out when price crosses back over the indicator. So that would be cross and close, right? It has to close. So it's going to be somewhere around there. Okay. So that's not a bad trade. 3.9 risk to reward. You're risking 1% to make 3.9%. So not too bad, right? And when it works, it's beautiful. This is really the draw for a lot of people. This is what gets them into trading, because when they see a YouTube video or a Facebook promotion that shows you a screenshot of something like this, then it's like, yeah, that's easy. I can do that. And you're telling me people are making thousands and thousands of dollars every week doing this? And yeah, if that's not a draw, I don't know what is. I mean, like, that's similar to what got me into it. Mine was even more basic because it was binary options that I came across first. And it was just like, if you can guess what price is going to be above this level or below this level, it's a true or false statement, then you're going to win money. And so, yeah, um, that didn't last too long, by the way. Figured that one out real quick. But anyway, if price always did this, then it's easy money. Okay. Unfortunately, price doesn't do that all the time. You have a lot of this sideways stuff that goes on a regular basis. Okay. And you tell me the last time you saw a YouTube video or a Facebook promotion about an indicator or a trading system and they gave you a screenshot like this. You don't see that because, yeah, this is where the money that you made in those trends, you give it right back in these situations. That's why I say it's a grind. Okay. And a lot of times, your risk to reward isn't the greatest. Like that example I just showed you was a good example. But let's say you're getting into a trade like this. Okay. So you had price come above and close above both of these. So you're getting in on that close right there. You're going to put your stop loss below that low, right? And then you're going to get out when price crosses back below. That happens right here. We get a close, right? Right there. So what are you looking at here? You're looking at a bigger risk than reward. You know, that's terrible. So, um, what are the flaws? Okay. And I really, again, not gonna put a whole lot of time into it, but I mean, if to be fair, let's talk about some. Again, I said there's three strategies on the screen, so let's talk about the other two. The other two, um, well, one of them is even worse, because you're really getting in late because you're waiting for your moving average to cross below the other moving average. So here's a nice trend right here, right? And if you could have got in somewhere up here and got out somewhere down here, that's going to be a great risk to reward, right? Let's take a look. Let's see if you got in up here somewhere. Put your stop loss above there, and then you were able to get out, let's say somewhere even around here. Okay, you're looking at 5, almost 6 to 1. Okay, on that. All right, but if you are using indicators, you don't get into this trade until right here. uh, so you got your crossover right here. So you would get in around there. If you're putting your stop loss above the most recent high, then your stop loss is there. And then if you're waiting for price to cross back over, or worse, waiting for the moving average to cross back over, then you're getting out somewhere around here. Once again, your risk is higher than your reward. And again, even worse, if you're waiting for the crossover. So um, that's one moving average crossing over the other moving average. Okay. Then you have there's really four strategies because you have divergence too, but we won't go into that. Um, just to keep the video as short as possible, we'll look at the basic RSI strategy, which is basically when this line gets up here, it's oversold, or excuse me, overbought, and when price or when the line gets down here, it's oversold. And what you're looking for is when price gets to oversold or overbought, you're now then looking for a crossover on your moving averages, either for price to crossover or for a moving average to crossover. So this example here, you have oversold, and then we come back above that, and then price would have crossed over here, so you would have gotten in here, and looks like you may have squeaked out a win because it looks like you would have came close to getting stopped out, but close here, stop loss below here, and yeah, where do you get out? Um, if it's a if you're getting out when it comes back below the moving average, then you got out here. Once again, terrible risk to reward. If you get out when you get to oversold, well, you don't get out until over here, which at that point you've lost. And so the examples are plentiful. Um, as far as it's gonna be a grind. Again, your risk to reward isn't gonna be the best. Um, when you do make money in decent moves like this, you're gonna give it back when you start getting into stuff like this. Because again, you have so many crossovers, you're getting chopped up. That's what they call that, getting chopped up. So um, that's that's your indicators. Can you win with them? Yes. If you do this long enough, you'll be able to figure out some type of money management plan to where you can grind it out. Um, and you may be able to make 2-3% profit on your account every month. Um, maybe five. You know what I mean? Something like that. Yeah, it's gonna be a grind. And I mean, compounding your account at 5% a month, you can definitely do a lot with that. And if you have a lot of money to start out with, then yeah, it's not a bad situation. 5% a month is what? Um, 5 times 12, you're looking at about 60% a year. Um, that's, I mean, any business wouldn't be too upset with 60% profit every year. Um, but yeah, it's a grind. All right. Um, when you really start learning how price works, so let's kind of get rid of this. Uh, I wanted to call it crap, but let's just get rid of these indicators. When you really start learning how price works, you start understanding that it's based off of price itself. And there's a lot of different terms for it, but for me, it's simply supply and demand. Um, you have this move down here. The move originated from right here. So if we was to go ahead and put an outline on here, as you can see, price came down. When it came back up and hit this area, it dropped. Okay. So one, you're only focusing on price. So you're going to eventually learn the language of price. Okay. Again, learning the language of your environment is super important. When you get all the indicators off the screen, you have no choice but to look at price, and eventually your brain is going to pick it up. That's how it works. Neuroscience 101, your brain only responds to patterns and images. Patterns and images. And if you're looking at price constantly you're going to start to recognize the patterns based off the images that you see on the screen. Okay. So, supply and demand, you're not reacting because you see this level was formed once price did this big move. And so this took place, where the originated from was on January 2nd. Okay. By the time price got back here, it was January 5th. So 3 days later. So you already had this mapped out sometime when once it got down here and you started seeing it come back. This is January 3rd. You can already come in here and map your trade out. And just to kind of give you an example of how we do it at Seven Kings Trading, you would come in, let's go here. That would be basically what you're looking at. And then your trade is here. And stop loss at this red level. Okay. And yeah, this is our entry tool right here. It's basically a Fibonacci tool, because that's all we use Fibonacci for at Seven Kings. Um, and then your minimum risk to reward is going to be a 3-to-1. Okay. There's other factors that we would look at. I'm not going to expose that secret here in this video. I do have another chart open over here that I can get an idea of what our target would have been for this. So bear with me while I do it over here. So March or January 5th. Gotta find it on my other chart. I can't give all my secrets away. So let's go. So right here. To get 15-minute chart. So our target would have ended up being here, right here. So that gives us a 5.2-to-1 risk to reward on that trade. Okay. I don't trade AUD, USD. These are my main pairs here. I'm starting to really learn these other ones right here. But yeah, so how we would approach this situation, and I don't get in on a 30-minute chart. I normally get in on a 3-minute chart, but I'll show you some examples of that here in a second. But basically, this is an example of how we would trade. So we're not waiting for this to cross over that. Our risk to reward is always going to be 3-to-1 no matter what, and we can set that out ahead of time because we're not reacting to anything. Like, you got to wait for the price to cross over that moving average before you even know where you're going to get in, and that until that you have to wait for that to happen before you even know where your stop loss is going to be. And then you have no idea when price is going to cross back over, so you don't have an idea of what your profit is going to be. And so if you're just trying to do 3-to-1, which is what we do every single time, you're gonna lose a lot of trades because how the nature of those indicators work. So anyway, You're not going to be reactive, you're going to be proactive, meaning you already have an idea of where price is going to be. You're already ready to go. By the time price gets back there, you're already like you literally don't even have to be at your chart. The only thing that you do have to be at your chart to know is where your target is going to be. And again, that's not what we're going to go over in this video. If I do expose that for free on YouTube, it'll be a long down the line. But um, you could set a alert right here. Okay, I'll just put a line. I'm not going to put an actual alert, but you can set an alert right here, before it gets to your area. Once it gets to your area, then, if you have our system, our target system, then once it gets there, you can come in and say, okay, we already know we're at minimum going to be at a 3-to-1. So you're already going to have this set up. And then once you get this alert, you're getting close to that area, you can come and kind of get an idea of where price is going to be. And you would come down to this area here, and that's going to give you your 5-to-2 or 5.2 to 1. So you're being proactive, you're not being reactive, you're paying attention to price. So you're actually learning the language, speaking the language of the market. And if that's not a leading, it's not an indicator, but the system is a leading system, right? Because before price even gets here, we're already focused on this level based off of this move down. Okay. This was our supply level. When price gets back to it, we're expecting a reaction. We don't know how big of a reaction. All we expect is a reaction. And that's really all you need is that information ahead of time. Okay. If you go to a horse race and you know what horse is going to win ahead of time because you have insider information, that horse isn't going to win every single time, but more times than not, it is. And so you're going to have an advantage over the rest of the field. Okay. This is what we're talking about. And then obviously your risk to reward. Instead of, and I'm going to go over some examples of some actual trades that we took. But 5-to-2 is already killing everything that we saw as far as the moving averages. Okay. And I'm not cherry picking stuff. I just, picked it out randomly. All right. Why did I end up in this area right here? Because I was showing you um, the chop. Just kind of giving you an example of when you do win a good trade using indicators, how you get chopped up. So that's how we ended up here. But let's go to my baby. This is what I trade the most. Okay. And just this is how our charts look. Okay. Like this is a trade. This was a level that we was looking at. We lost that trade. That's why I have that marked out as red. Um, this right here was an area that we was looking for. We won that trade. That was a 4.72 to 1 risk to reward on that one. And then after we won that one, it kind of shot through that next level. So we lost that one. So lost 1%, won 4.72 on that level. Um, and these are just two trades that we've taken so far this week. And then this was yesterday, 4.91, based off this level back here. Um, and then, yeah, we have a level down here that we're waiting for it to get to. Again, proactive, leading. We're not waiting for this to cross over that. We already have our levels kind of set up. Right here, we have this level that we're looking at that formed when this push happened. This is a scary level because you have some equal highs. So there is a possibility that they could try to run the liquidity above those equal highs. And so that can be a winner or a loser. Can't really say until it happens. But then we have another level up here that we're looking for and waiting for price to get to. Uh, Over here, we had this win right here. After this loss, so I need to I could update that, change that to red. So yeah, just being transparent, not saying, yeah, we don't lose, and just showing you all the wins and never showing you any losses. No, we lose. Everybody loses. But right after that loss, we came up into this area and we won. And this was 5.6 seven risk to reward. Uh, and yeah, just in case you are curious, because it did come close to our stop loss, it didn't hit our stop loss. So red line is our stop loss, came there, and so yeah. So win there. Um, da 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 da. We had a win here, win here. Um, we had some wins already here, so this level I just kind of have as orange because it's an old level. But we're still waiting for price to get back down to here. As far as what we're looking at above, because price is still going up, we do have some levels up here that we have price waiting to get to. So once again, proactive, not reactive. Um, GBP, JPY. Um, we had a win here. This right here was a loss that we took. Let's see. Now, I normally trade on a 3-minute chart, so some of the trades won't show up because, yeah, we don't need huge. So that was actually a win. Uh, we don't need huge moves to win either. This was a 2.2. So this actually was a win, but based on our target, we was only going to take 2.22 because of our target system. Again, we like to do 3 to 1 for the most part, but if our target system gives us 2 to 1, we're still winning more than we're losing. So at 50% win rate, even if we were 2 to 1 risk to reward, we're still gonna, if we win 10, lose 10, we still end up 10%. So if our target system gives us a target, it's over 2, we will take it. But most of the time, we're looking for a 3 to 1. So that was a win at 2.22. Uh, and really, we haven't gotten anything since then because we should have had something. I don't know why I didn't look at that level, but even if I did, it looks like that would have been a loss. So, um, but yeah, um, then I do believe we would have won this one, but for some reason we didn't set the trade. For some reason I haven't been paying attention to GJ the last few days, but this looks like it would have been a winner. Yeah, it didn't hit our stop loss, and obviously that would have been a 3 to 1 easy. Um, but yeah, so this is what you're going to learn how to do if you pay attention to price. If you pay attention to price, you learn supply and demand, you'll be able to set your trades up way ahead of time. And you're gonna, oh, do want to point something out. Okay, so here, this would have been a winner. Look at where we would have gotten in. The candle that would have gotten us into this trade is the candle, the last down candle before the move up. So almost forgot to point out the accuracy in which we win these trades with. Okay, look at here. Uh, the trade that triggered us into this one was, where's the trade at? Let's go back to 15-minute chart. Okay, all right, yeah. So let's just do this real quick so we can find that 3-minute candle. So this is the candle that triggered this in. And then the next candle tried to run our stop loss, but it didn't. We got lucky there. But yeah, we're getting in at the pretty much at the top of that move. Um, let's go to our GJ. This is my baby. This is the one I focus on mostly. But let's look at this. Okay, look at what gets us into this trade. Bang. Okay, we're hitting it. The candle that actually was the lowest candle in that move up is the candle that got us into that trade. Um, this one here, we got triggered in with this one. One, two, three trades candles later, and then price moves up. And so the accuracy in which we get into our trades is amazing. Why? Because we speak the language. We understand the language of the charts. Okay. And so when you start understanding the language, you don't have to um, forfeit a lot of your profits. Because if you're waiting for crossovers, let's put an indicator on here, a moving average real quick, and go back and what was it? Let's get rid of that. Make that green. We'll leave the little thick lines this time, but 21.50. Look at that there. If we was waiting for price, let's get rid of our drawings. If we was waiting for price to cross over, we missed most of the move. Look at that. I don't care if we was waiting for price to cross over or for the moving average to cross over. We missed most of the move. And so the accuracy as well. So yeah, let's get rid of this actually. So when we're talking about speaking the price or speaking the language of price, it's hard to do it if you're not looking at price. And indicators are not going to really allow you the luxury to pay attention to the price the way you should. And it's going to get you in late. It's going to be very lagging. Your risk to reward is going to be horrible. So yeah, this is what you need to get away from, and this is what 95% of these videos out here are teaching. 95% of these people out here that are selling you something is based off this crap. You know what I'm saying? The indicators. Um, you want to get away from that. And so, if you have found this video to be informative and it's something that you want to follow and, potentially learn, I will be I'm working on it. I'm almost done. I should be done by the end of April at the latest. I'm putting together a website. I'm putting together a course to teach it. Um, and yeah, if you're interested, just keep following, subscribe to my channel. I'll be letting everybody know when the course is available, when my website is up and running. And we're not going to make it super expensive. We're going to make sure that it's accessible by a lot of people. You are going to have to invest something, you know what I mean? But we're not going to be crazy about it because we make money trading. I've been doing this for a while. You can go back and look at my videos. I continue to tweak my system so that it becomes more accurate, so that we can get as much profit out of it as possible. But I've been doing this for a while. I haven't put a course out. I haven't felt the need to do YouTube videos all the time because I didn't need to. But now that I have a system that allows me to kind of go in, check my levels, set my trades up, and just kind of react to my alerts, I have a lot more time on my hands. So I will be doing more videos. Again, they're not going to be all fancy with the green screen and stuff like that, but I am going to be more consistent with them and just kind of breaking down some levels and whatnot and showing you what we got going on. And once the course is ready, I'll make that announcement. But in the meantime, if you can subscribe and comment, and let's have a conversation, ask me any questions you have. And yeah, tell your people about it, because I definitely think the information I'm going to be giving is going to be worth your time. Um, Speaking of that, I think we're kind of getting, uh, yeah, 40 minutes is definitely time to end this. So, do apologize for it being so long, but pretty much when I do something, I'm thorough. So, can't just run through it. And I know we live in the age of, you know, TikTok and, you know, IG quick videos and stuff like that. But anything worth learning is going to take some time. Anything worth explaining is going to take some time. So, yeah. Anyway, hope you guys enjoyed it. If you did, you find some value in it, go ahead and subscribe. Any questions, put them in the comments. I'll make sure to respond to them. And yeah, if I have a piece of advice, it would be get away from the indicators, learn how to read price, learn how supply and demand works, and you're going to see such a big difference in your trade. That being said, you guys take care. I will see you later.